The costliest mistake you'll ever make with health insurance isn't the monthly premium. It's not knowing what's changing for 2026. In the next 10 minutes, we'll reveal 3 policy changes affecting marketplace shoppers and why some people could see their premiums jump from $700 a month to over $4,500. Welcome to NextGen Money Trends, where we break down insurance and money fundamentals so they actually make sense for the next generation. It's open enrollment season for 2026, and this year is different. Major policy changes are happening. Subsidies that millions depend on might disappear. And if you don't understand what's shifting, you could end up paying thousands more than you should, or worse, locked out of coverage entirely. In this 3-part series, we're breaking down everything you need to know. Part 1 covers what's changing and why it matters. Part 2 shows you how to choose the right metal tier for your situation. And Part 3 walks you through the exact enrollment steps. Let's start with the 3 policy changes you need to know about. There are 3 major changes happening in 2026. Most of them won't affect the majority of viewers. But if any of these situations apply to you, pay close attention. Number 1, Medicaid work requirements. Starting January 1st, 2027, though some states may roll them out earlier, eligible adults must log 80 hours a month of work, school, job training, or community service. If you lose Medicaid coverage because of these requirements, you're also blocked from receiving marketplace premium tax credits. This could affect millions of people who currently rely on Medicaid expansion. Number 2, DACA recipients. As of August 25, 2025, DACA enrollees are no longer eligible for marketplace coverage, affecting roughly 10,000 people who have already lost their plans. Number 3, immigrant premium tax credit cuts. Beginning January 1st, 2026, lawfully present immigrants earning below 100% of the federal poverty level lose their premium tax credits. A year later, refugees, asylees, and trafficking survivors lose those credits as well. These changes won't affect most viewers, but if any of these situations apply to you, check with a marketplace navigator or healthcare.gov directly for your specific eligibility. Now, there's something even bigger happening that could affect everyone's 2026 premiums by hundreds or even thousands of dollars per month. You need to know about this before you enroll. Here's what's happening. The enhanced subsidies that have made marketplace plans affordable since 2021 are set to expire on December 31st, 2025. Congress is voting in December on whether to extend them. But as of right now, the outcome is uncertain. This matters because if the enhanced subsidies expire, the impact is dramatic. For some people, premiums could more than double. We're not talking about going from $75 a month to $160. We're talking about going from $700 a month to over $4,500 for older adults in high-cost areas. Let's look at real numbers. A 60-year-old couple in West Virginia earning $85,000, just slightly over the subsidy cutoff, could see their monthly bronze plan premium jump from $0 in 2025 to $2,830 per month in 2026. That's nearly 40% of their household income going to health insurance alone. For a family of 4 earning $130,000, premiums could increase by over $11,000 per year. Even younger people aren't safe from increases. A 40-year-old earning $50,000 could pay roughly $2,000 more annually. The income cap would also return, cutting off subsidies entirely for individuals making over about $62,000 and families making over $130,000. Now, don't panic. The marketplace isn't going anywhere, and cost-sharing reductions for silver plans. We'll explain that secret weapon in Part 2. Stay regardless of what happens. but the amount of help you get with your monthly premium could change dramatically. So here's what we're going to do. We'll explain how the marketplace works for 2026 under both scenarios. When you actually enroll, you'll see the real numbers on healthcare.gov based on whatever Congress decides. The good news is that the strategy for choosing the right tier stays exactly the same. You'll just be working with different premium amounts. First, let's establish what the marketplace guarantees no matter what happens with subsidies. If you're not covered through an employer, Medicare, or Medicaid, healthcare.gov becomes your one-stop shop for private plans. 30 states use this federal platform, and the other 21 states plus DC run their own versions, like Covered California or NY State of Health. The rules, subsidies, and plan structures work the same way everywhere. Every plan on the marketplace covers 10 essential benefits: doctor visits, emergency room care, hospital stays, prescriptions, mental health treatment, lab tests, and maternity care. All included. And here's something most people don't know. Preventive care like vaccines, mammograms, and colonoscopies is completely free. No copay, no deductible. Pre-existing conditions can't be used against you either. They can't raise your rates or deny you coverage. Period. The financial protection is real. For 2026, the ACA caps out-of-pocket costs at $10,600 for an individual and $21,200 for a family. About a 15% increase over 2025. Once you hit that ceiling, your plan pays 100% of everything after. These protections don't change regardless of what happens with subsidy legislation. Now, about those subsidies. If Congress extends them, millions of people will continue paying very affordable premiums, sometimes $10 a month or even less for solid coverage. If they don't extend them, subsidies still exist, but they'll be less generous, and there will be an income cap. Either way, when you go to healthcare.gov and enter your information, the system will show you exactly what you qualify for based on current law. So the marketplace guarantees you can get covered with strong protections. The question is, which level of coverage gives you the most protection without wasting money? In Part 2, we break down the 4 metal tiers: bronze, silver, gold, and platinum, and show you exactly which one fits your situation. We'll reveal the silver plan secret that can save you up to $5,000 per year, show you how to compare plans based on total costs instead of just premiums, and walk through real-life examples of people who picked each tier and why their choices saved them money. Understanding what's changing in 2026 is only the first step. Knowing which tier to choose based on your healthcare needs and income level is where the real savings happen. Here's what you need to remember from Part 1. Enhanced subsidies might expire December 31st, 2025, which could dramatically increase premiums for millions of people. A few policy changes affect specific populations like Medicaid recipients and DACA enrollees. But the marketplace protections, essential benefits, pre-existing condition coverage, out-of-pocket maximums, those stay in place. The next step is figuring out which metal tier fits your life. That's exactly what we cover in Part 2. If this helped, hit like and subscribe. Drop a comment if you have questions about the policy changes or subsidy situation. And make sure you watch Part 2. That's where we show you how to actually choose your plan. Until next time, keep building that next-gen wealth.